sitting in Geneva temporarily, Mr. Mark Ostwald, Chief Economist and Global Strategist at ADM Investor Services International, and Mr. Victor Yang, Senior Editor at the JLC Network Technology. Thank you very much, everybody, for joining us today. Laurie, I think I'll start with you, if you'd allow me, and let's go to the sort of one of the news items that's been topical this week, which is the continuous appeal by the US to Saudi Arabia to please, can you increase volumes? It's all OPEC's fault that gasoline prices are almost $4 in the US pump, etc., falling on deaf ears. Could we expect any change in that reaction from Saudi or OPEC?
I believe like the Saudis and OPEC Plus at the last meeting, they were very clear in stating all the reasons why they shouldn't be changing the agreement that they have. It is very important for OPEC Plus to continue with the discipline that they have put and not to go into any kind of changes until they go into 2022, hoping that all they would see the improvements in 2022 as expected. Now today we see that the transatlantic travel has started again, so that this is a good point. Let's see how that will develop, and because that will have a kind of an impact on the demand, and then they will go forward with it. So therefore, I don't think that Saudi Arabia, even the Emiratis, the Russians want to today want to hear what the Americans are saying and want to do what the Americans are saying. On the contrary, they are kind of, if you want, comforting the market and saying that in case there is need for us to inject more oil, we'll do that. We have the capacity. We've heard yesterday the Emirati minister saying that we do have the capacity, but today we don't see any point in increasing, and we're continuing with this because I say it is very important for OPEC Plus to keep the discipline and not to go into any problems the same way that we've seen it like a couple of months ago when there were disagreement between Saudi Arabia and the UAE on the baseline. So I think they will continue with this until 2022.
Okay, thanks, Laurie. Mark, just on that point of OPEC plus, generally speaking, there's the geopolitics of not doing what the US is telling it to do, maybe, but also they're being quite cautious in bringing back supply to the market because they are being cautious about sort of GDP growth outlooks going forward, and rightly so, would you say? I mean, how's that looking for the big consuming nations of China and the US, and from OPEC's perspective of how that might change?
Well, I'd just like to sort of wind back to the original point about what's the US, we hear this from the US every day. I mean, what's the real point about it? Basically, the point is gasoline prices in the States are always a massive hot potato. In some states, you're seeing retail gasoline prices getting close to a very emotional $4 level. And, so they've, Biden and his administration basically have to find the bogeyman. I think it's sort of, there's a certain irony here that actually it's the high level of energy prices because, a lot of the high price of oil actually has to do with trickle down effects from gas and coal. And that high cost of energy, just as we're coming out of the pandemic-induced recession, is definitely a headwind to growth. There's no doubt about it. But probably the more substantial one, and you're starting to hear, interestingly, a number of central bankers in the US and indeed in Europe starting to fret about China's property meltdown. And the property sector in China is very important. I think people probably have to get with the program that it's not going to be have the sort of strength of demand for raw materials, and that's everything from energy to copper to iron ore, steel, etc. That it has been. They've let this balloon out of control, and their biggest problem right now is that basically by encouraging consumers to basically park most of their savings. If I remember rightly, the number is something like 70% of all Chinese wealth is invested in property. So if the property market starts to drop, and there is evidence that some developers who aren't in trouble are basically stepping into the breach by trying to take market share, but cutting prices very sharply. And that is creating a great deal of concern. I think in terms of the US growth outlook, particularly the manufacturing data basically says to me what's happened in the last couple of months is really, particularly the weaker Q3 GDP numbers were more a reactive correction to all that stimulus-driven strength that we saw in the first half of the year. I think the US economy is doing okay, and it's just going to be interesting right now. I think that our point of concern is moving from Asian infection rates, which has been the big concern over the past couple of months, back towards Europe, given the rise in infection rates that we're seeing pretty much across the board, very sharp rises. Thus far, I would suggest that most of the governments seem to be very loath to do anything other than perhaps impose mask-wearing mandates in public places rather than any lockdown measures. So basically, Europe's growth should continue at a reasonable pace, and then the same in the US. China, we're still very much in the balance.
Okay, thanks, Mark. Well, I'll go to you, Victor. Good morning again. And let's talk a bit about China. We have an article in our bulletin today, which is a point that Mark made, which is, will we see what's happening in China and the economy ripple through to the US economy mostly, and Europe as well? I mean, from a point of view of trade, obviously, and demand from China, that's clear. We're going to see some impact there. But what about this whole real estate crisis in China, the impact it's having there? And will that, do you think, ripple beyond your borders?
Well, sure, there's still kind of concerns about the real estate industry. And the central bank just issued a few announcements, in October and early November about, the risk was being under control, was kind of controllable. And in some economists believe the government has many ways, many measures to take to keep this under control. Say, for one effective measure is to tax the real estate industry. Say, to impose a tax on houses. To get the prices back to normal levels, to reduce speculation, to make sure the housing is for living in, not for speculation. So that's considered one effective way to keep this under control. And
Yeah, and what about the crackdown on other sectors in China? I mean, one thing that has happened is that the tech sector, even the education sector. I mean, this policy by the government of really cracking down on certain sectors at different times, whether it's to control a company that's getting too big or just to try to in its sort of transition to a more service-oriented economy. Do you see that policy continuing in 2022, or will the government be giving companies any light relief for a while, a breather?
Well, this would continue, and it would not let a company becoming a monopoly in the market, would not let it monopolize the industry, the market, or including social opinions And so that's what the government is trying to do, is making sure big companies, big corporations do their shares to contribute to the economic growth and to the well-being of the public, not just making money. So it's quite a big difference here. Is the capital doesn't call the shot. So the big companies, no matter how big they are surely under the control of the government. So the government is now trying to make it even more level playing field for smaller and medium-sized industry and enterprises. So to make it, to create more opportunities for smaller enterprises and to give people more opportunities to start up their businesses, particularly in the countryside, See now the government is now providing guidance, giving training and giving people bank loans without interest in the countryside to start up their business as well. So they do not have to get so many people to plants to factories. They can start other business, and because the government is now restructuring the industry, so it needs to create more opportunities, job opportunities in other sectors, because it tries to remove those outdated units. Saying,
okay, well,
for instance,
and I'll stick with you, Victor, just on that point. The government is trying to give other sectors and smaller companies and entrepreneurs opportunity. It's also, as you said, quality of life, trying to clean up the environment, the atmosphere. And of course, one of those pledges has been not to build any new coal plants, etc. But as we've seen, China, well, at least the premier wasn't at COP26. And we didn't see, any new pledges there from China or India, for that matter. And I'll go to Mark on that one soon. On the coal front, I mean, China has doubled its coal imports in a year for obvious reasons. We've had an energy crisis, energy crunch. How's it going to marry those two things? It's trying to, change its economic policy and get away from that. And at the same time, clearly, it's pumped up those coal imports and production in the immediate sense, and that doesn't look like it has any chance of retreating.
Well, there has been some temporary reversal of the policy this year. Say, in August, the official media Xinhua News Agency said in an official news report, said local governments do not need to, stop all the projects that are highly polluting or energy intensive. Just because we are aiming for carbon neutralization or something like that, it doesn't mean you have to stop all the projects. Well, the government needs to strike a balance between, economic growth and the restructuring for greener development. Well, particularly say like in September, there was widespread power rationing and a lot of factories were shut down. But this could affect, a lot of jobs. So the governments needed to act quite quickly. Even at the cost, temporary reverse of the policy, to bring some coal mines back to production, to import more coal, and to drive down coal prices quite sharply. And this is just because, it has not created so many jobs yet to offset the counter effects of those when the commodity prices surge and a lot of plants were kind of, having surviving trouble. So it had a lot to do with the job opportunities.
Okay,
but over the long term,
we'll come back to that. Laurie, just to come back to the immediate market of supply. Again, I mean, not back to OPEC in a sense, but let's just talk a bit about Iran. We've got the talks with the US, the nuclear talks, set to sort of resume at the end of this month. Commitment from both sides to do that. We have an article on our bulletin this morning saying Iran is coming back to the table, but only with a guarantee that the US won't then, pull the carpet from under it once and if they reach a deal. So how hopeful are you that this time, this round of talks, we're going to get somewhere with this? From a regional point of view, is there support as well here?
Look, I don't see people are putting much hope on this round of talks, especially that it is starting with conditions that I don't think the US is interested in hearing, So it's just talk for talks. And we're at the end of the year. And for the Iranians, it was as long as we can sell our oil in different ways, so we're okay, we don't care. If we still have market in Venezuela, we have market in China, we have market in other places, we don't care, we can continue with this situation. The moment that the Americans, the US will intercept these shipments, what we've seen, there was a shipment going to China that wasn't been bought by the Chinese and it went back to the to Iran, all of these and the interceptions that happened from the US, then the Iranians are like, again, oh, let's go back to talks, and let's start discussing about the talks, etc. Because the moment that they would say that we are back on the table of negotiations, they would think that the US and others will not escalate, and it will be like as it is. So I don't think there is much to hope for. They can do that. They can start the negotiations. We're talking about 29 November. After that, I guess everybody will be in a different mood from the US, etc. It's December, it's end of year, it's Christmas, whatever. So nothing much will happen. What's the position of the Europeans? This is always interesting, because we've seen the rapprochement that is happening between Macron, the French government, and the Iranians in the region. That has always been like the French Europeans pushing for Iran to come back to the table with the US. But I guess the Iranians are not interested in finding a solution today, and the US is not keen as much as they were keen when they started at the beginning of the year. You remember, we were all saying that they might start at the early 2021, but that doesn't mean that we will reach a solution where the oil will flow, the Iranian oil will flow to the market. So going into 2022, I don't think we would expect like any Iranian oil coming into the market soon. Maybe if it depends how situations will go on, but maybe it will come sometimes in 2022, but not.
Okay. Well, let me ask you about whether the Saudi-Iranian talks, if you like, more unofficial talks, are going to make a difference to that. You've had Saudi and Iran, various type of rapprochement beginning. At least both have an interest to try and perhaps start to make peace. And how is that going to perhaps help the US angle? And then, putting into that also the fact that the US just wants to get out of the Middle East really as much as it can and start to focus on Asia. And this is one thing it wants to conclude and leave. So how is that working, that sort of triumvirate between Saudi, Iran, and the US and their interests to strike sort of a new regional balance?
Look, the US was very clear, like, we're leaving the region, you guys talk to each other. And definitely there was this discussion that had started between the Iranians and the Saudis, and the Iraqis were happy to play that middleman role, because the Iraqis today are trying to create a role for themselves in the region that goes beyond being only controlled by the US or controlled by the Iraqis, by the Iranians, etc. So they were happy to play that role, but there is a limit, I think. And the Saudis were frustrated as well, saying that we're not getting anywhere with these talks. On the contrary, we are discussing things. Suddenly you have all these rockets coming in from the Houthis, or things escalating in Lebanon or in other places where Iran has real control. So they will continue. Again, these will be like places, venues for discussion, but I don't think that they will get anywhere. Today, Iran, I don't think Iran now wants to come with solutions to any place. Iran wants to, the new regime, at least, or the new administration wants to be stronger and stronger, and then maybe they would think about real solutions. Today, they're not into that. They are blocking any kind of solutions in Lebanon. They look what's happening today in Iraq with the assassination attempt on the prime minister. So all of these are signs of escalation from the Iranian side. At the same time, talking about like, yes, we would like to go and negotiate with the Saudis or with the Americans, but they're not doing that. It's just like creating realities and trying to change some realities that they don't like on the ground with changes that are happening in the region.
Okay, Laurie, thanks. Mark, just to go back, let's go across to the US again. We talked a little bit about the impact that what's happening in China, maybe rippling through to the US economy and expectations there. Of course, Biden had one victory last week, which is that he got his infrastructure bill passed. And there's another big one coming on social policy and environment, etc. So with that now in place, what impact does that create for sort of GDP outlook for the US immediately, for demand for energy? I mean, do you see that having an immediate boosting impact or not?
Psychologically, I think for people in markets, yes, that's the perception. If you actually look at the details, because a lot of it actually includes things which were basically works in motion. This is over 10 years. You look at it and it's something in the region, I think, of about 50 billion a year. In a country the size of the US, that's actually not a lot. So I think it's good because the US definitely needs to upgrade its infrastructure. So does the whole of Europe as well. This is not just a problem in US, particularly in the context of energy transition, because we haven't even vaguely got to the sort of scale of transitioning. It's a positive. It's a win for Biden. He badly needed one after the badly handled exit from Afghanistan. At the margin, these type of public sector spending measures, wherever you see them, the key is always how much does it then encourage the private sector to join in? How much does it spur? And the proof of the pudding there is in the eating. We really don't know. And the fact of the matter is actually, when going back to the whole point about high energy prices in the US, whinging about them, the problem is actually a product problem. It's not an oil supply problem. And for instance, a good example, and Biden does need to think positively about this, and he's very anti-oil. But over 2020, 5% of US refining capacity was lost. So if you then have a disruption like the pipeline disruption, you're already, well, who's going to make up for the capacity? We've already lost 5%. So there needs to be actually more of a transition on that side, transition thinking, and saying, well, we can't just choke this off, because otherwise we may actually have gas prices, gasoline, as in at $6 or $7, and you can guarantee Mr. Biden will be voted out. Well, certainly the Democrats will lose control of Congress in next year's midterms if you start seeing gasoline prices permanently above $4 in many states.
Well, let's just stick to the US, Mark, and just go a bit to the Fed policy and what's happening on the macro front there. We talked a lot about this in the last week or so on this program. But I just wanted to go to for your thoughts on that. Obviously, we had the Fed last week coming out with not saying really much new, it's reconfirming a tapering will start, which was expected. And some questions now around, what's really going to happen with interest rate policy next year. Is there going to be a new Fed chairman, which we'll be hearing about quite soon? Is it correct to say that nothing will move on the interest rate front until at least July 2022? Is there any way that could not be the case?
Well, you can't rule it out. The Fed certainly doesn't want to move before they finish their tapering. That's absolutely crystal clear. Their biggest problem is, and we may see it with the US PPI data, which despite very beneficial base effects in the sense that we have a high number dropping out from last year, so we may see it flatline for the first time in a very long time. They may be forced into the situation. The biggest danger for all central banks on the inflation front is they keep on saying it's transitory, and eventually it starts spilling down into wages, and you're seeing that in a lot of countries, and suddenly they're forced to move, and they've lost control of the narrative. You can see a small scale example of how bad that is in the UK. The Bank of England has totally lost the narrative. So it's important, well, it's to be hoped that they're not forced into such a move, and it's particularly as markets will then take control, and that's the biggest problem. The central banks still need markets to keep real interest rates deeply in negative territory, because the world economy, particularly the financial system, remains extraordinarily fragile.
Absolutely. And one of those things that the US economy is heavily in debt, and one of those debt holders is China, of course. We've got our survey question up there, which actually relates to something we were discussing at the beginning. China economic policy or challenges will impact the US economic outlook, agree or disagree. We'll get the result of that a bit later, whether it's from its real estate sector crisis or not. Victor, let's go back to you and just talk a little bit about, again, the Chinese economy and energy demand. I'd like to just get some clarity from you. Chinese imports in October were down again, oil imports, and yet there's this argument that it's making that it is stockpiling and protecting itself from a cold winter ahead. You were telling us earlier how temperatures dropped a few degrees just yesterday. So where is China with its oil import strategy today? Is it, regardless of price, is it going to be putting stockpiling as its priority?
Well, and as we know, the country stocked up on pile last year. So that's why it chose to reduce imports in, say, September, October, when prices were so high. And on the other hand, its demand will keep growing in the coming years, say until around 2025, as the country aims to pick up on petroleum consumption around that time. And demand in the last 2 months of this year will probably rebound. And as you know, diesel supply is kind of tight now in China. And so the country is now kind of boosting crude imports right now. And for refineries, they either raise the yield rates of diesel or boost crude imports to increase crude runs. So in the last 2 months, the demand will probably bounce modestly. And
it'll bounce,
yeah.
Okay.
Yeah.
Okay, and I mean, is there any, in terms of how that plays against the coal argument? Obviously, you've got, you had as we talked about, the coal imports and production have been increased. Do you think it will look at oil as a better alternative and reduce that coal crunch that it's had?
Well, now the crunch has kind of eased quite significantly now. So that's why coal prices had almost plunged by more than 50% over the past months. Say about 54%, and quite suddenly. And so this is kind of, we do not have quite significant coal shortage now. But we still need a lot of coal in winter, that's for sure, because we depend a lot on coal for power generation, and we need more heating this winter. So, and demand wouldn't drop through the heating season until next March also. But after that, the country would probably resume its previous policy on reducing coal consumption and will switch to more cleaner fuels such as natural gas, say probably after the winter heating, and the previous policy would be resumed. Yes.
Okay, thanks. Mark, just to touch a bit on, let's just look at that poll result. So, okay, well, that's quite a big majority. 79% agree it will impact the US economic outlook. It'll ripple through. Mark, just to go to you on India, we haven't talked about India for a few days on this program. It all seems to be ticking along nicely. The disaster of the Delta variant that swept through India in the spring and the second quarter, that seems to be out of there at the moment, and the economy is back on track. Where are we with India in terms of its GDP forecast for next year, in terms of its pull on energy demand?
Things are definitely picking up, but the fact of the matter is, because of the Delta variant impact, we've still basically seen the estimates for this year fall from 12.5 to around 9, and it's going to slow a bit further next year, largely due to base effects. The potential is still very much there. There's no question about it. And it's got this opportunity, but everyone I speak to in India keep on saying the one thing: if we are going to orientate ourselves somewhat, in terms of the rest of the world, orientate ourselves away from China in terms of demand, there is a huge opportunity for India. Is it being exploited enough? Everyone I hear on the ground says, well, maybe at the margin, but it's not really getting the sort of traction which would be transformative. And in a lot of senses, that's the age-old problem that even a relatively strong government like the Modi government still can't implement the sort of reforms which really are going to drive a major improvement. Nevertheless, the momentum is there, and it's most likely of the larger economies in the world. It's certainly going to have the strongest growth, and by extension, its demand for energy, particularly oil and everything else, is actually going to be pretty robust. So it will be a bit of a light at the end of the tunnel, certainly.
Okay, Laurie, I'll go to you just for the last word. We didn't talk about US shale in details there. I just want to get your thoughts on that again, sort of circling back to at the beginning of our conversation on the US oil and Saudi, and putting aside what Biden is doing to the US oil industry internally and in terms of new policies. But why are we still not seeing a lot of shale production back on track, despite these very steady, very high, very healthy oil prices?
Look, I'm not an expert on what's happening there, but I know from what we know from last year and before that the idea of now closing on that and making money more than really growing was what we saw last year and was continuing. Going forward, what is going to happen? It's really interesting because Biden cannot keep on having this green ideology and green energy at home and asking others go keep on producing, and then going to events and saying that I am leading this green energy and energy transition and asking others. So there is work that should be done in the country. And I guess going forward with this pressure, if OPEC Plus are not really listening to him, the thing is I'm not sure that he's going to tell them, you guys go start producing again, but shale will be coming back definitely into the market.
Yeah, but the majority of people do think it's going to be back into the market a bit more significantly, maybe up to 1 million next year.
They're coming back. It's not that they're not coming back. They're coming back, but it's not as before. They've changed the way they think. The model has changed. The business model has changed, and they're taking their time as well.
Mark, just a quick question to you before we wrap up. Do you think that the US will release SPR, strategic petroleum reserves? It's got a report coming out, I believe, later today, and it's going to sort of base its decision on that in terms of energy outlook. Do you think it would? Is this sort of crisis territory where would you choose to do that?
Yes, I think it's quite likely. I don't think it actually solves much of the problem, but in the short term, to be blunt, they're basically just needing to show that they're going to do something. It'll be a short-term measure. The market will probably react to it modestly, but it's looking more at the overall picture. And if we go back to shale, the biggest problem there's a lack of ducks. We've got drilled and uncompleted wells. There hasn't been any upstream investment for years, and that's where the problem lies. A lot of these problems are cumulative. And that's the biggest problem for the US oil industry. And it's not going to get that much in the way of financing because the banking sector is feeling the pressure from the public not to invest in oil and gas, even though it still will go on.
Okay, I have to get this question to you, Mark. Sorry to hound you. But if we see a change in Fed chairman, a nomination take place, will that alter, do you think, the macro policy in the US?
Not enormously. I mean, the person whose name is in the frame is Lael Brainard, and she's very intelligent. She's definitely on the dovish wing. So I don't really think it makes, it's really going to make much of a difference. I think basically she is likely to border on the dovish side and be slightly more dovish than Mr. Powell. But it's the makeup of the whole FOMC which really counts at the end of the day. And we still have 4 new members for next year, some of whom we don't know who they're going to actually be, because they still have to, there's nominations required.
All right, thanks very much, Mark Ostwald, Laurie Haitian, and Victor Yang joining us this morning. Thank you to our viewers, and we look forward to seeing you tomorrow. Have a great remainder of the week.